Are you looking to launch a startup and wondering which Doola plan actually makes sense for your budget and business model? Or are you terrified of picking the wrong tier and getting hit with unexpected compliance fees or missed tax deadlines later? Choosing the right plan option on Doola can feel tricky because every founder comes in with completely different requirements, whether you are a local entrepreneur, an international non-resident, or a founder looking to raise venture capital. The main problem most founders face when looking at Doola is determining whether they just need basic company formation or if they genuinely require an all-in-one back-office solution that handles ongoing annual reporting, bookkeeping, and state compliance. The biggest fear for international and non-resident founders especially is messing up U.S. tax obligations like Form 5472 or failing to maintain a valid registered agent, which can lead to hefty IRS penalties or having your business dissolved by the state. On the flip side, domestic U.S. founders often fear overpaying thousands of dollars a year for full tax compliance packages that they could easily manage with a local accountant or cheap software. So, what are the best plan options on Doola for startups, and how do you pick the right one without throwing away precious startup capital? To break this down, Doola offers 3 core subscription tiers: the starter plan, the tax and compliance plan, and the business in a box plan. The starter plan costs around $297 per year plus state filing fees. This option gives you official business formation for an LLC or C Corp, your EIN registration with the IRS, an operating agreement, a virtual U.S. mailing address, and your registered agent service for the first year. The starter plan is the absolute best option if you are a bootstrapped founder, a U.S. resident who already has an accountant, or someone who simply needs legal establishment and a physical presence in the U.S. without paying for ongoing tax management. However, you must keep in mind that the starter tier is an annual recurring subscription, meaning you will pay that baseline fee every year to maintain your registered agent and virtual address. The second major option is the tax and compliance plan, priced around $1,999 per year plus state fees. This tier includes everything from the starter plan, but adds full federal and state annual tax filings, official state compliance management, access to bookkeeping software, and consultations with a CPA. This option is specifically tailored for non-resident founders who do not live in the United States and do not want to navigate complex foreign-owned U.S. tax laws on their own. For an international entrepreneur selling on Amazon, running a SaaS, or offering remote services, this tier provides peace of mind because Doola takes over the legal responsibility of filing required IRS documents on time. The third option is the Business in a Box plan, which runs about $2,999 per year, or roughly $329 per month. This is Doola's high tier, fully managed service that takes the tax and compliance package and adds a dedicated human bookkeeper who manages your monthly financial statements and quarterly projections. This plan is best suited for funded startups or businesses with high transaction volumes that need real-time, hands-off financial management without having to hire a full-time internal finance team. The actionable takeaway here is to assess your founder profile before entering your credit card details. If you are a U.S. resident or already have a dedicated CPA, stick with the starter plan to get formed affordably and avoid paying for tax services you do not need. If you are a non-resident founder without deep knowledge of U.S. corporate tax rules, opting for the tax and compliance plan prevents devastating IRS fines and keeps your entity in good standing automatically. Make your choice based on your legal residency, tax comfort level, and transaction volume to ensure your startup stays fully compliant. With that said, thanks for watching and until next time.